Hello, everyone. Happy winter session. Welcome to Building Credit from Scratch. My name is Terrence Brazil. I'm from the Harvard Federal Credit Union, and I'm joined by Jen Fries, also from the Harvard Federal Credit Union, and we are here to educate you on how to build your credit. So, today's webinar, we will be reducing all background noise. So if you have anything going on in the background, you're having your lunch, playing with your dog, totally okay, it's fine. You have it muted, so it's all good. If you have any questions during the presentation, please submit using the Q&A feature. And if you're on the webinar right now, let us know that it's working. Tell us where you're joining us from. We'd love to see just how far and vast our membership is and where you are tuning in from. It's cool information. Also, this presentation will be recorded. So if you miss anything or you're like, hey, wait a minute, what did Terrence say? Can you go back? No worries at all. We'll be uploading it to our YouTube page within a couple of days after this winter session has ended. And also, there will be a post-workshop survey where if you would like to let us know how we did and how we can improve and any information that you would like to see in future presentations, that's where you go ahead, add in the notes, and we read any and all feedback. We love it. Okay, so the community engagement team, the man, the myth, and the legends for all of us. We are all great at what we do here. My name again is Terrence Brazil. If you were a part of our earlier winter session, you saw Ty Koppelson and also Jen Fries, my boss, in the background as well. We are all CCUFCs. What that means is we are credit union certified financial counselors or certified credit union financial counselors. I got that wrong. But what it means is we know what we're talking about. We're here to help and we love what we do here. We exist just to help you, our membership, with any of your financial needs. So that way you can go from point A to point Z in terms of being a financially well individual. I'm your presenter today. Again, Terrence Brazil. Enough of my face. Let's keep moving on. So a little bit about Harvard FCU and what it means to be a part of a not-for-profit banking institution. What it means is the main three things here. We are community focused. We are dedicated to empowering our Harvard community and beyond. So that's Boston, Cambridge, Somerville. And now because we are federal, Harvard FCU, we are now accessible to a much wider audience that extends beyond the Cambridge Somerville area. There is a path to membership for anyone and everyone. Our products and services. We have free access to ATMs nationwide. And what really matters, what it comes down to, is the fact that if you happen to visit an ATM that is outside of our network and they charge you a fee, we will refund you that fee. And that's one of the perks that we have for just, being a part of being a member here. And also we are accessible anywhere, where if you happen to be outside of the Cambridge Somerville area and you want to bank with us, you are able to visit any other credit union in the nation and bank with them like you're banking with us directly through our co-op shared branching network. And one more thing, once a member, always a member. And your membership extends not just to you, but your family as well. Above you, so parents, grandparents, aunts and uncles, and below you as well. Any children, any spouses, if you want. Your membership is all encompassing because we like to keep it in the family here at Harvard FCU. And to keep going, today's agenda. What is credit and why it is important? How do I build or rebuild credit, no matter where you are on the journey? Totally fine. And credit myths. We're going to dispel some of the things that you heard on TikTok, YouTube, Facebook, Instagram, the things that may or may not be true, and healthy credit habits. Some practical tips you can take away and start implementing to build your credit tomorrow. So let's level set so that we are all on the same page as we begin and start this journey. What is credit? I know many people have heard about it. Some people say I need it. Some people say I don't need it. Some people say I don't know. But point blank, credit is an agreement wherein someone receives goods or services now with the understanding they will pay the creditor back later. What this means in layman's terms is credit's a loan, and whether that loan is extended to you through a credit card, a fixed loan like an auto loan or a mortgage, or maybe it's a debt consolidation loan, a loan that pays off a loan. But at the baseline, it is money that's extended to you, and then you have the understanding that you will pay it back later. Most cases with interest. It will get into that later. So, two things that come with credit. One is a credit report. Credit report is a statement of how you have been with your credit history and current credit activity, and it shows details about how you've previously managed credit accounts in the past. So you'll have your balances on your credit report, you'll have your limits, you'll have your payment history, have you been paying on time, and who collects this information? The credit bureaus. There are three major credit bureaus, Experian, TransUnion, and Equifax. And each one may have different information about each consumer. So you might see a loan that exists on Experian, but may not exist on TransUnion. And same thing vice versa when it comes to Equifax, Experian, TransUnion, and whatnot. And that's not anything bad. There's nothing wrong with that. Each lender is not obligated to report to all three credit bureaus. They do have an option and a choice. So if you are learning and beginning your journey, it may be a good idea, if you want to pull all three separate credit reports, so that way you're beginning your journey from a place of complete knowledge as opposed to selective knowledge. And what do? They collect information on you. Collect information from creditors, lenders, utilities, debt collection agencies, the courts, and they're basically trying to see, what kind of person are you? Are you paying back your bills? Are you responsible? Are you able to handle the credit that is extended to you right now? And also on individual consumers, same thing. It's really good information from the companies themselves and from individual consumers. And basically what they're doing is they sell that information to different lenders to determine, are you credit worthy? And by credit worthy, we'll get into that a little bit later. So credit reports have this pieces of information on here. Debt, credit card debt, auto debt, education, so student loans and whatnot, anything that's been in collections, payment history, your account history, and your request history. So credit reports are an amazing place in terms of beginning your credit journey. And if you don't have a credit report, it's totally okay. And if you're curious and saying, you know what, Terrence, all this stuff sounds great. This is a lot of information, and I would really like to know where I can get it. You're in luck. A free credit report. You can get it from annualcreditreport.com, and it's totally free of charge. This is the only place that you can get it, and I want to be very intentional about this. Please beware of any places that try to charge you or ask you for your credit card information, because that is not the right place to go. The only place is annualcreditreport.com, and I think Jen is going to be putting that link in the chat right now. Thank you, Jen. So again, if you are beginning your journey, it's the new year, you're like, you know what? New year, new me, new budget. We're going to start things out fresh. Annualcreditreport.com, get all the information, start there, and then as we continue, you'll see some practical tips and tricks so that way you can start off your year right. Now, managing your credit score. I mentioned earlier at the beginning of the presentation that your credit comes in two pieces. The first piece we discussed, your credit report. This is the second piece, your credit score. Now, what is a credit score? Credit scores are the measure of your consumer credit risk for lenders. What does that mean? That comes down to, okay, all the information that is collected on your credit report is going to be compiled, compressed, and it's going to spit out a number. And that number is going to be between 300 and 850. 300 is on the low side, where it's considered poor, 300 to 579-ish. all the way up to 850. 850 being on the high side, saying, hey, you're doing great. What does that score mean? That score, the lower the score, it means that you may not be able to currently handle and or manage effectively the current credit that you have extended to you. Maybe you're not making your payments on time. Maybe there's a bit of emergencies. It's okay. It's not a reflection of who you are as an individual, just a reflection of how you're managing credit right now. And on the high side, it says, oh, wait, this person's doing great. They're able to pay their bills on time. Maybe they have a few different types of credit cards, a few different types of credit extended to them. Not saying multiple credit cards are necessary for high credit score. It just might be, you're able to handle what you have going on. And that's perfectly fine. One other thing, just because we're going to make things a little bit more complicated, your credit score is independently managed from the actual credit bureaus themselves. Why? I don't know. I didn't make the rules. I'm just telling you about it. So there's the FICO score and the Vantage score. FICO score and Vantage scores, usually they'll be around the same range-ish. The only difference is how they calculate different things to report. But you will be able to get your FICO score and Vantage score if you check Credit Karma or whatnot. It may not be exact, but if you are looking for a pretty exact place, you can visit Savvy Money, which is a product of the credit union if you're a member, and you can take a look at your score, do some pretty fun things and projections out with them as well. Why is credit important? So we've talked about what credit is, what it impacts, and why does this matter to you? Why is credit important? Credit can impact many different things across your financial journey as an adult in the US. Credit can impact your ability to rent or purchase a home. It can impact your ability to get and keep some jobs as well. And it can impact your ability to open bank account and access loans or credit cards. So I just recently, maybe like 6 months ago, got a new place renting, and they pulled my credit. I wanted to see, hey, how are you able to handle the loans you have right now? And thankfully, I had a credit score where I was able to move forward and everything worked out fine. But they still pulled my credit. They wanted to see what was going on. And that is very real. That's not a joke. And some places have a minimum credit score that you need to have for you to be able to live there. And that is a very real barrier to entry to those who may not have a credit score that reflects who they are as a person. As far as being able to get and keep some jobs, I work in finance. I work in the financial industry, and there is a certain minimum requirement for me to have so that way I can keep my job. And it's a reflection of if I can handle my own money, I shouldn't, if I can't handle my own money and my own finances and whatnot, I should not be in a position to be telling other people about theirs. And that's just the reality of some jobs, especially these like high corporate jobs. I've worked at like big banks before, and they truly do care. Let's see. And miscellaneous other things like car insurance rates, cell phone plans, and more. Actually, funny enough, my mom is moving. She recently purchased and then settled on a home, and we were, funny enough, ending our contract with Verizon and starting up a new plan. And before they would give my mom new equipment, they asked for a social security number so that way they could run her credit to say, hey, before we give you this, we just want to make sure. It was a soft pull, but it had no impact, but they still wanted to see, hey, what's your credit score? So we're beginning to enter an age where your credit has a very real impact on the ability to access what can feel like a basic utility like the internet. So the more information you have, the better prepared you are, the more ability you have to make an influence and impact, positive impact on your credit. And also, this one is incredibly important. How much will you pay to access credit? Because not all credit will be extended to everyone on equal terms. Let me say that again. Not all credit will be extended to everyone on equal terms. What does that mean, Terrence? It means that your credit score impact is very real when it comes to your wallet. On the lower end of this, you can see this chart here. This loan is a 36-month loan for $25,000. Simple loan, all the same, right? The difference is going to be the credit score, which then impacts the interest rate, the APR that you see here, which then will impact your monthly payment, and then will have an impact on the additional cost in a year. So the loan is the same, the credit score changes, and everything else changes as a result. On the low end, we see here about 500 to 589, and that's fair. No matter where people, it's okay, no judgment. But the APR is very high. It's 17%, and truly, this is kind of on the low end. This is an old chart. Things are much more higher right now, and that's a monthly payment of $900, which results in additional costs in a year of $1,908. On the high end, we see a credit score of 720, which is a very low interest rate of 4.23%. That's a huge difference from 17 to 4. Very big difference for a monthly payment of $741. Almost like $150 difference. And it gets even better. The additional cost after 3 years is wild. So I like to say, I like my lender. I don't love my lender. I do not want to give my lender extra money if I do not have to. I'm only in the business of transacting with my lender for the sake of giving them a loan. I'm not here to make them rich. I'm not here to buy them dinner. I'm here to get my loan, do my business, and go about my life. And I want all of you to be in the same mindset and position. So that way you are able to compare like terms and understand like, hey, this is real. And even if you're of the type to say, you know what, I don't need credit, this and that, there is some very real impact. And this is the credit score impact, Nothing scary, but I do not want to sugarcoat. I want you to have the direct and most access and accurate information as possible. Okay, so hopefully it didn't scare you. And now we know what a credit score is, what a credit report is, what is credit. And now, how do we start building credit history? So before opening any credit accounts, it's important to know how they work, what they range from, and how to start building credit history. One way that can be incredibly effective is a secured credit card, which requires a cash security deposit to open the account. The security deposit reduces the risk to the lender because if you don't pay your card, they have the money from your deposit to pay. People with no or lower credit scores often must start with a secured credit card to establish or rebuild their credit history. So there's no shame here. There's no embarrassment. There's no, oh no, I can't get a regular credit card. The impact will be the same, whether you have a regular credit card or a secured credit card. As long as you're making your payments on time, everything will be okay. So deposits for secured credit cards generally are low, on average anywhere from $200 to $500, but they can still be higher. With a secured credit card, you are still required to make your monthly payment on time or have it risk reporting late to the bureaus. And your deposit is not used to pay for purchases. You are still charged interest on the balance you carry over to the next month. Next up is a credit building loan. A credit building loan is it's like a secured credit card, but instead of it being a revolving, it's a fixed loan, meaning it has a term that ends, a fixed interest rate that will not change, and it will perform all the same necessary functions as a secured credit card or any other type of loan. Sometimes the rates can be a little bit lower, or a little bit more favorable, but it is dependent on where you go, so shop around. Next up, becoming an authorized user. This has some perks, this has some risks. So I added my niece, Selena, as an authorized user on my credit card way back when because she was younger and had a good credit score. Like we wanted to like get her and I wanted her to be able to start off from a better position than when I started, right? And you know what, Jen? Actually, do you want to tell a story about you and Ian with this?
Sure. So the thing about being your parent or another person who has a longer credit history can add you as an authorized user onto their credit card. That will allow the younger person or the person with the shorter credit history, who's the authorized user, to charge anything they want on the card. So there are risks to the adult. And there are also risks to the person who's an authorized user. So I'll use my own example. I'm a parent, my kid is a college student, and I decided they're a junior and I decided to make them an authorized user on my credit card this year. I have a long credit history and a good credit score. So I knew my credit history was going to help them. Not every parent for all different reasons, has a good credit score. If your parent has had to declare bankruptcy, if they have a low number credit score, we talked about the ranges, this is not going to help you. But if your parent does have a high score and they're willing to add you as an authorized user, that's great. That will improve your credit score and the length of your credit score. So the risk to me as the person authorizing someone is that if my kid were the kind of kid who's going to just order a whole bunch of Grubhub or, do something to really rack up the charges without telling me, then I'm still on the hook for paying all of that. So I know my kid, I know that that's not how they operate and that we'll be in good communication. So our plan is that when after they have had some time of being an authorized user on my card and building up that credit history, either their senior year or just as they're graduating, get them their own card and then transfer them off the authorized user for me. So that's sort of like it's a transitional thing to be an authorized user typically. And it can be a great way for someone who is new to the country, a young person, anyone who's building credit from scratch to do.
Awesome. Thank you, Jen. So, how do I rebuild credit? So we're tackling the credit conversation from multiple perspectives so that we are able to serve a wide audience no matter where you are on the credit spectrum. So, paying off outstanding past due balances. If you are in a position where you are rebuilding credit, that is completely okay. There is no right or wrong credit score. They're not a reflection of who you are as an individual. However, we've discussed there are some impacts on having a credit score that may be on the lower end, and there are some perks to having a credit score that is on the higher end. So if you have any past due accounts, prioritize paying those first. And you can find out where these past due accounts are by checking your credit report from the link that Jen put in the chat, annualcreditreport.com. So landing a full-time job can be really exciting as your paychecks will typically be quite a bit larger than what you may have been paid for. Oh, no, we're going to skip all that. Next up, secured credit cards and credit building loans are a great way to rebuild credit too. If you are in a position where, you know what, you had some credit cards in the past and you didn't have the most responsible behavior and things are different now, totally okay. Secured credit cards and credit building loans are phenomenal. If you are building credit from scratch in the beginning or rebuilding credit, both serve as long as you are, again, making your payments on time and in full. Next. Uh, I'm going to skip that. Okay. Some credit myths. So, part of the reason that building credit can feel so overwhelming is that there are a lot of conflicting information out there. There are some of the information out there is flat out not true. Let's take a look at a few of the most popular credit myths and why they are not necessarily true. The first one, credit myth number one, you must carry a credit card balance from month to month in order to build credit. Myth. First, when you get a credit card statement, every month there's a statement balance and a minimum payment due. To avoid a late payment, you need to pay at least the minimum payment due by the due date. However, if you only pay the minimum payment, there's a difference between that number and the statement balance. If you only pay the minimum payment, you will not be able to pay off your balance as quickly or as effectively if you made additional payments if you have a high balance. And to be honest with you, you will most likely be charged extra interest if you only pay the minimum balance, because how it works is minimum balance is not designed to get you out of credit card debt. It is designed to keep you in credit card debt. It's the least amount you can pay, so that way you satisfy the, hey, he paid his bill on time, but the credit card companies are like, great, we're going to keep adding on interest on the remaining balance for years. And that's a cycle that you do not want to get into, because it is very difficult to get out of once interest starts accumulating month after month after month after month. And I'm not saying, you know what, start throwing all your money into your credit cards so that way you can pay them as soon as possible. Make a plan. Have an idea. If you get paid weekly, bi-weekly, see if you can add in a little bit extra into your credit card balance so that way you can pay it off. And have an idea of when that date is so that way you can stay consistent. Number two, all credit scores are the same. What I see on Credit Karma and what my credit union or bank will see. What I see on Credit Karma is what my credit union or bank will see when I apply for credit. That is not the case. What you see on Credit Karma and those different apps and places, those are kind of just guesses. They're more often than not in the correct range of like maybe good, poor, excellent, but they're very rarely accurate as far as what the actual score is. And again, we talked about this two scoring models, FICO and Vantage Score, and each model determines credit scores differently, and the scores are not the same. 90% of conventional mortgage lenders use FICO scores when determining credit worthiness and extending credit. Savvy Money, Credit Karma, Credit Sesame, Credit Wise all use the Vantage score. And the majority of the time that you're receiving a free credit score, it's likely Vantage unless your financial institution or credit card company provides it to you. You'll be able to know what score you are seeing because it will say it very clearly and very directly, FICO or Vantage. Credit Karma might say that you have a 710, but if you go apply for an auto loan, your bank might see a 660. And that's a very different interest rate, as we discussed, when it comes to that loan. So don't always take what you see online as like fact. Take it with a grain of salt. 3, opening a new credit card every time I get an offer in the mail is a good thing for my credit score because you need lots of credit cards to build credit. Huge myth. And I want to be very, very direct here. The credit card companies are not here to be good to you. They are here to make a profit. And that's just by design. And if you have multiple credit cards, there's a chance that they're hoping you might not be able to manage all of them, and then you miss a payment, and then interest is charged, and there's a loop. So while technically having more available credit limits can help improve your credit utilization ratio, which is very different. This is a dangerous game to play. When you open a new credit card, you have a new hard inquiry and you have a younger account in your length of credit history, both of which can negatively impact your credit score. Also, the more credit cards you have, as I mentioned earlier, the trickier it is to keep track of due dates and make all payments on time. And there's more potential for you to get in over your head. While there is no magic number of this number is good for credit cards, it's best to have no more than two or three. Personally, I have two credit cards, and that at one point I had three, and I canceled it because it truly just was kind of too much. It wasn't like a lot. I had it because I think it was for a short window, and I said, you know what, I'm good with just two, and that is more than enough for me because I can make the payments on time, everything's automatic, and it's less is more when it comes to credit cards. Number four, closing a credit card when I pay it off will improve my credit score. This is more of a it depends. Some people think that after paying a credit card, they should close it. This can negatively impact your score. And here's why I say it depends. If that credit card is a young credit card, the impact may not be equal to if it's an old credit card. Paying off an old credit card, basically what you're doing is you're erasing all of the credit history when you close it. And if that happened to be your first credit card, you're erasing all of the time that you spent building that up. And it can also impact your utilization. Once you open a credit card, it is best to keep it open as long as you are managing your card responsibly. And also, it is okay to close a card if you feel it is necessary. So this is a myth. There's no hard and fast rule. Paying it off will improve my credit score. It truly depends on your unique situation and depends on a lot of different factors and variables such as age, utilization, limits, and whatnot. So before you go ahead and close that card, add a little bit of extra thought. Myth number five, checking my credit report will hurt my credit score. Completely false. You can check your credit report and there are no negative impacts for checking your credit report. You are able to review it. You want to see what's going on. Are you making your payments on time? And you also, very much in the era and the age that we are in when it comes to scams, frauds, and people stealing identities, you want to check your credit report as often as possible so that way you can be aware of any potential misinformation, any new lines that you did not open, or anything that's not reflected accurately. I'm gonna be honest. The credit bureaus are people. Human error can play a factor, and you want to be on top of that. The sooner you catch an error, the easier it is to correct it. We also talked about applying for credit, how it leads to a hard inquiry, and for more information about that, a hard inquiry, there's two different types. There's a soft and a hard inquiry. A hard inquiry means that a lender has pulled your credit score information and or credit report for the sake of giving you a loan. This is a hard pull, and this can have an impact on your credit score. There's also a soft pull. A soft pull is for educational purposes only for the sake of just learning to see where you're at. And most often than not, soft pulls do not have an impact on your credit score. So just want to make that clear. There are two types. And when you pull your credit report for yourself, it is a soft inquiry. Doesn't impact negatively, not for the sake of a loan. For educational purposes, go nuts. Pulling for a loan does have an impact. Some healthy credit habits. So it's imperative that once you get access to credit, you practice healthy credit habits to ensure you are building positive credit history. Before we wrap up today, here are some important tips on healthy credit habits to practice whether you are starting from scratch or rebuilding positive credit history. Okay. I've said it earlier, I'm going to say it again. I'm probably going to say it a few more times. Make every payment on time every month. There's another presentation that we use. So we talk about credit that goes much deeper into what it is and like how to make a payment and like the breakdown of the score and whatnot. 65% of your credit score is made up of your payment. If you pay our payment history, are you paying it in full? That's how much impact you have. Keep credit card balances low. There's a rule of thumb where you don't want to go beyond 30% utilization when it comes to using a credit card. And what I mean by that is, let's say you have a brand new credit card and its limit is 1,000. You don't want to go beyond $300 because once you get beyond that, then it starts to show that maybe you are not the most responsible, or maybe you have a little bit of difficulty of managing credit. And again, not a reflection of you, but you definitely do want to keep it within that 30% rule of thumb, because that way it shows, okay, I can use it, pay it back, use it, pay it back, use it, pay it back. That pattern and making your payments on time will do wonders for your credit score very, very quickly. My recommendation is to pick one small budgeted expense to use your credit card for every single month. I personally, what do I keep on my credit card? Oh, I go to my doctor's office, and every month they charge me, and no, I'll be direct. I go to therapy. So I charge my therapist has my credit card. It's $15 per month, and it's very easy. I just pay that and they shop my credit card. I pay the credit card. And to be honest, it's very easy, nothing too crazy. And it's a cycle that happens automatically where I have it set up where it can pay it off in full every single month. And then if there's a balance that I have, I can make that extra payment and it's okay. This way, I'm not thinking about it and everything cycles through very effectively. And I think that's the best way to do it. Something that you can manage and something that's not going to be, super expensive. Do not apply for new credit unless you need it. This is a great one where don't just apply for a credit card just because there's a really nice special offer on the TV or in your banking app that says, hey, apply for a credit card. If you don't need it, don't apply for it. Unless maybe you are intentionally looking to get a travel card because you plan for some upcoming like big expenses, you want to get the perks and whatnot. Or maybe you're doing it because you want to build some new credit history because you want to buy a house. But the point is, don't just do it just to do it. Have a purpose, have a reason behind it. And if you don't need it, don't get it. If you can pay it in cash, pay it in cash. Don't ignore bills. I am guilty of this. I do ignore bills sometimes. I'm working on it. Even if you don't think you should owe it, so what happens is tolls will get me. I don't know why. They're not very expensive. But sometimes tolls will be like, because I don't feel like I should pay it, but I pay it. I still pay it. My boss yells at me all the time. I do pay it. But don't be like me. Don't ignore bills because even if you do think that you should not pay it or you owe it, there's a chance that it can end up going to collections. And or in my case, one time, you can be denied registration for your vehicle for unpaid tolls, which I learned. So pay those bills. And review your credit reports annually. I can't stress how important it is to do this because you don't want to be caught with, for example, let's say you're Joe Schmo, right? 800 credit score, things are beautiful, but because things are well, you're not checking your credit report. And all of a sudden, your score starts to drop. You don't know why, or you get denied for a loan that you assumed was in the bag. Things are fine. Turns out someone opened a credit card in your name that you didn't know about and maxed it out and made no payments. So that's what we're talking about. That's the risk because people are not going to open a credit card in your name and then suddenly be like, yep, here's some good payment history. No, they're going to open a credit card in your name, max it out, and take and then leave you with the negative impacts on the consequences. And that's just you now. So consistent monitoring, consistent checking in to make sure that things are okay. It prevents fraud, prevents scams, and it prevents surprises too. And again, said it before, I'm gonna say it again, I'm gonna keep saying it. It's like in the CCUFC fine print. Make every payment on time every single month. The amount of impact that this will have on your credit report and your credit score is huge. And I know maybe you can't make your payment in full every single month. That's why the minimum payment's there. But I'm not saying make the minimum, somewhere in the middle, something so that way you are making steady progress towards that full payment and beyond if necessary.
Terrence, can I mention what I do is I have my minimum payment go out automatically because I know that I can handle that. So no matter what, I know that my minimum is not going to be such that it's going to break the bank. So I have that automated on all my cards. And then, as you mentioned, you can't just pay the minimum. I go in and I pay off my credit card every month, but I do that consciously, making sure I have the cash in the bank. Sometimes I have to wait for a paycheck to come in and then do it. So I am careful on that. But you can make more than one payment in a month. That's something I think a lot of people don't realize. So you can have that minimum go out and make a payment later once your paycheck comes in or once you're sure you've checked your balance. So I think that's a great strategy. Just have your minimum just automatic, and then you know that you're
Mm-hmm.
never going to miss the payment that way.
Absolutely right. Thank you, Jen. Also, what the heck effect? This is losing motivation due to prior behavior. This is a little bit of the behavioral economics side of things. If you've taken up money personality stuff, we love behavioral economics here because we like to look at your relationship with money holistically as a person, the emotional side of things. And what this says is failure is a part of success, not something that hinders success. Where, you know what, if you are trying your best, and you have all the best of intentions. You've made automatic payments. You try to save, you try to pay off your debt, and then you know what? You just can't make it one month. That is totally okay. It just means, surprise, surprise, you are human. And that is completely, absolutely okay. What matters is what can you do next time? How do you get back up again? And you keep going and you keep trying. Slow progress is better than no progress. And there's no amount of failure that can keep you down if you are willing to get back up again and keep moving forward. Little words of wisdom from T today. Keep going. All right. So GreenPath. GreenPath is our best friend here at the credit union. They offer free and confidential financial assessments. What that means is if you have attended this presentation and you're like, this stuff was great. That guy Terrence was spitting facts. That was awesome. Jen, phenomenal. But what do I do next? What do I do for my specific situation? GreenPath is the answer. They do credit report reviews, student loan counseling, rent, mortgage, and home buyer counseling, and debt management plans. So, no matter where you are on your financial journey, if you want help for your specific situation, and I mean you, yes, you, the one on this webinar right now, you, contact GreenPath Financial Wellness. Speak with a financial wellness expert at 877-337-3399. I don't know why I became an infomercial, but it worked out. And learn more at harvardfcu.org/thrive/greenpath. And truly, 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 GreenPath is a great resource. It's free to you. So it's, yeah,
Terrence, I just want to mention the chat was actually disabled totally for this webinar, which is not usual for us. So I'm putting it into the Q&A. You're also going to get these slides sent to you, everyone who's on this call. So, but you don't have to be a Harvard FCU member to use GreenPath. The link is in the Q&A. And anyone who's on this webinar is eligible to get free financial counseling from GreenPath. I know one of our people was like, I'm suspicious of free things. This is something that we make available to anyone who comes to our financial wellness events. So sorry about not putting it in the chat. It is in the Q&A, and keep going. Sorry.
Cool, cool. And also, I do want to like bring up that point, the question that you answered. I'm also suspicious of free things. I truly am. And you know what? To that same point, the credit union is a not-for-profit. So kind of like also in the like same things, but we exist because there has to be a balance to our for-profit capitalism like society. We exist to help you out and for educational purposes only. We were founded in the credit union space because we know not everyone can wake up wealthy one day. So we are here to be a support, a guide, and an educator, so that way you can learn all that you can without feeling like you need to pay an arm and a leg, and sometimes another arm as well. Let's see. So GreenPath, and let me do this. And our survey. Jen, please put that link in the Q&A as well. Let us know how you like this webinar. I was it's just me and Jen here, so like let me know how I did. If you liked it, if you like the jokes, if you think my dad jokes are bad, keep that to yourself. I'm sensitive, but like other than that, let me know how we do. Also, Learning Lab Plus. It's a free online educational portal with GreenPath. So if you are looking to just like learn something and you liked what happened here today and you want to like get some hands-on learning, Learning Lab Plus is pretty good. The courses are kind of small, maybe like 5 or 10 minutes a piece, but you can begin to like explore. And again, GreenPath doesn't have to be your only place for education, but it can be a resource that you use to compare, learn stuff, and get some more information. Now, we are in 40 minutes. We have 10 minutes left. Oh, we have to go on time. Any questions? You have me here. You have Jen here. Please, there is no question that is too big or too small. We would love to answer your questions. Please use the Q&A feature.
And I also just want to put a little advertisement in here. We do have one more session of Wintersession left, and that is Investing 101. It's always a really popular one with our board member, Shahar Ziv. I put Wintersession into the Q&A. I know you all found us once, but you're going to go back to that same page if you want to register for the Investing 101 session. So we have one question here. I've never used a credit card before, but I have 2.5 years of timely rental and utility payments. Am I going to have a decent credit score? So
I can answer some of that.
Yeah, go ahead. Yeah. This person may want to open a credit card if you feel like you're going to need credit for some reason, like if you're thinking of mortgages in your future or something. Because Terrence, do you want to talk about, I mean, they do take into account in some circumstances rent and utility payments, but I don't know if you can say more about that.
So there are some new services out there right now that I want to just educate the masses on. So traditionally in the past, rental and utility payments would not report to the credit bureaus. So they typically would not have an impact on your credit score. However, I have seen that Experian Boost is out now, and there are these new apps that are saying switch so that way you could report your rent and utility payments and get credit for it. Now, that comes with a caveat. I'm going to be very honest. So I used to work in a mortgage lender position. Here's the rub with that. If you suddenly begin to report your rental and utility payments, then the lenders are obligated to use that information when it comes time to qualifying you when it comes to your debt to income ratio for your mortgage. So now the utility payment that would not have been used to say like, okay, are you making your payments on time, will be used and taken into account. And there's like a catch-22 with this. It could be great because, yep, it gives you a boost on the credit score if you're making your payments on time, but it also might be a hindrance when it comes to qualifying for more house because your payments or how much you can afford has gone down because of your utility and rental payments. So be mindful of that. And if you don't want to go down that path, you can go down the path of a secured credit card where that will still be like held against you in terms of like mortgage approval and whatnot. But traditionally, it's the minimum payment that's held against you for responsibility, not the balance, not the payments you're making. And the minimum monthly payment is usually a lot less compared to like a utility payment, especially ones that fluctuate in the summer and winter time.
Mhm.
Um,
We
Go
do
ahead,
have
Jen.
another question. Do you have to give your social security number to get your annual credit report? So again, you're going to go to annualcreditreport.com. And these people want to know, is it safe to give your social security number? And the answer is yes and yes. You will need to give your social security number because they need to associate your name. I know, for instance, Jennifer Fries sounds like a unique name, right? There's actually several just in New England I know of two, and sometimes have been confused with them, and I'm sure there are others in other parts of the country. So the way that they tell me apart is birthday and social security number. So you need to put those into annualcreditreport.com, the social, and that will differentiate me from the other Jen Frieses out and about. And
They
yes,
also ask you other questions too. They'll ask you, not to cut you off, Jen, sorry.
yeah.
They'll ask you questions about your loans too. Like, did you open, I don't know when I last checked my report, they asked me if I have a loan from like Honda, for example, and they'll give you like a rough month or year and say, did you open a loan with this organization around this date and date, such and such time?
To do
And
identity verification.
questions,
Hmm.
huh?
To do identity verification on you. They did that. Yeah.
Correct.
Uh-huh. Yep.
Just to make sure you are who you say you are.
Yeah. Yeah. Okay.
Good questions, by
Great,
the way.
great questions. Yeah. I think that is all that we have right now, Terrence, for questions. Just a reminder to folks, we are going to put you're going to get all the slides. So you're going to get all these links sent to you as well. So,
Yes. Thank you for attending Winter Session. And disclaimer, this presentation has been for educational purposes only. This is not intended or should not be constructed as tax, legal, or investment advice. Always contact a certified advisor for your specific situation. Jen, myself, and Ty are all credit union certified financial counselors. However, we are not your certified financial counselors. So please learn from it, but if you want additional help, contact GreenPath. Let's keep in touch. We are here. And again, thank you for attending Winter Session. We are Harvard FCU. My name is Terrence Brazil. Enjoy your day. Enjoy your time.
thank you, everybody.
Happy Wednesday? Tuesday. Happy
Tuesday.
Tuesday.
Tuesday. Happy Tuesday.